Hi there, welcome to Grain TV. I'm Kevin McNew. It's Thursday, September 29th, last trade day before we get into the quarterly stocks report on Friday. We'll talk about those expectations here in a second. But first, let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn closing fractionally lower, below 330, closing at 329. Soybeans managed a late session rally, gaining 4.5 cents, and wheat in Chicago was off 4.25. Really, it was just sort of marking time until we see some fresh survey results on stocks figures from USDA on tomorrow. This morning we did have another export sales announcement for China, this time 120,000 metric tons. On top of that, we also had weekly export sales. We'll talk about those in a second. Other news out, there was the International Grains Council putting out their latest production figures for world corn and wheat. In corn, they lowered their forecast by 3 million metric tons thanks to a lower production number out of China, but wheat was higher by 4 million metric tons. So overall, the wheat market really sort of shrugged off or took that news to the downside, getting us below $4 on front month D's futures. Other news, ABIOV, a private consulting firm out of Brazil, said they look for Brazil's soybean crop to be around 101.3 million metric tons. That's in line with USDA's forecast of 101 and up from last season's production of Brazil at 96.5. Let's take a look at weekly export sales. These numbers were certainly strong for beans and disappointing for corn, which left us sort of defenseless here in the trade session. Corn was coming in at only 575,000 metric tons versus expectations of 750 to 950. On the other hand, we did have the very strong Mexico deal yesterday. That was not in this figure because it will come out in next week's numbers. But overall, the market didn't see much here to really gravitate higher in light of harvest activity going on. In beans, the number was substantially above expectations, coming in nearly 1.7 million metric tons versus a range of estimates of 1,100 to 1,300. And wheat coming in at the high end of expectations, nearly 600,000 metric tons. Another respectable week for the wheat market. Let's take a look at where we stand in terms of actual commitments year to date and how these are tracking in reflection to the normal seasonal pace adjusted to meet USDA's export forecast. So when we look at corn, we're pretty much right in line with the normal seasonal pace to meet USDA's export forecast for the year. So 18.5 million metric tons is what we've booked so far. Keep in mind that does not include yesterday's big deal with Mexico. 1 million of that, 1.5 million, will be for 2016 marketing year. So that will certainly bump us up next week. Soybeans, on the other hand, is coming in above expectations, carrying at 26.1 million metric tons that have been booked so far versus a normal seasonal pace of 23.8, and wheat slightly higher at 14 versus 13.8 normal. Let's switch gears and keep in mind that tomorrow is the quarterly stocks report. This is actually a survey-based number. So unlike the USDA's monthly WASDE reports, these numbers that we're going to see tomorrow from USDA are actually surveys looking at stocks on hand. And so they are slightly higher than what USDA had been forecasting in their World Ag Outlook or the WASDE report. At least the expectations are. Corn is forecasted or expected to be 1.75 billion bushels of ending stocks for the end of the marketing year. Soybeans coming in at 201. These are expectations that traders are looking for in tomorrow's numbers. And then wheat coming in just below 2.4 billion bushels. Also in tomorrow's report is another wheat survey. This will break it out by wheat class. We're expecting a big wheat crop this year, and so traders will probably see those numbers from USDA. Let's take a look at the daily corn chart here. This has really been sort of a point of no real movement in the last month as we close out the month of September. In this month, we've basically traded in the very narrow 14-cent range up to 342 on the high end and around 325 on the low end. So we continue to sort of oscillate in this, really sort of having any sort of difficulty breaking out of this range. On the other hand, I think we may have one last push down with corn harvest starting to pick up pace. We're starting to hear talk about piling, especially at some major river terminals. We haven't seen basis break sharply yet, but I wouldn't be surprised to see improved weather start to really lead to a faster pace in corn harvest and potentially lead us to more lower prices before hopefully turning higher once we get past the harvest lows. That's all we've got for today on Grain TV. Join us tomorrow. We'll be talking about the results of USDA survey. And as always, if you'd like to learn more about how we can help you in your own grain trading situation, visit us online at grainhedge.com.
As a GrainEdge trading client, you'll get our Technical Alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.